Okay, recording this video is Wednesday, 24th September 2014, 5:23 a.m. Chicago time. It's kind of mid-morning here in France, and just want to do a video recapping this seasonal trade because it's working out quite nicely. And this level 1970 that I said was going to be absolutely key a couple of videos ago is the level we're going to have a little bit of a tussle over. So I'll get into those charts, but just quickly to say, hopefully there's a new look and feel on the website. It's about time we kind of refresh the look and feel, and there should be a video explaining the new look and feel and where to go and see things, find things on the site. So hopefully that's kind of working out well. So this seasonal trade, September effect, is the fourth one in the series. This is the series 1, 2, 3, 4, 5 kind of seasonal patterns that I like, and this is the one that we're talking about at the moment, where we have a sell-off in kind of mid to late September that kind of runs for 2 or 3 weeks. So it's this kind of sell-off that we're interested in. And Friday was the day when it should have started, and it did, right on cue. And of course timed with the Alibaba kind of IPO, which is just perfect for the Thursday night. You know, the pros kind of ramped it up overnight, and then we've been in a stealth sell-off ever since, and we kind of reached 1970 overnight on the Tuesday night. So here's the seasonal indicator. This is the weakness that we've had over the last few days, and we're expecting over the next 3 days continued weakness, but this 1970 level is going to be absolutely key, and I'll kind of recap why that is. So if we go through beta X trend, which is a trailing stop based on exhaustion volume, and I was talking about how exhaustion volume gets moves going and ends moves, you can see that this last kind of rally was started with exhaustion buying. So these red bars are exhaustion buying, the white bars are exhaustion selling. So exhaustion buying gets the move going, and then exhaustion buying ends the move. So all the pros that are kind of bought into this kind of activity getting the move going need to take profits, and this is what's happened over the last few days. So we had a really nice sequence Thursday, Wednesday, Tuesday into that kind of sell-off move, kind of decent volumes up there, and that was the high. I think it was around 2015. Yep, 2014 and a half, with the pre-open getting everybody excited for the IPO of Alibaba, and then bang, we've sold off ever since. So now we've kind of come down and had exhaustion sell, broken this trailing stop into a downtrend. I think we're going to have a little bit of a punch back, but the strength of that punch back will determine, you know, how strong this trend is. The reason why the 1970 level was actually absolutely key is it was the bottom of this little turning point, the last one that we had, and so the lows of these exhaustion bars are absolutely key. And so we came down pretty hard at the end of trade on Tuesday and bounced off those, and you can see we're bouncing kind of pre-open into the mid-70s kind of going on there. So this is the Russell. Russell's been the weakest of the lot. I'm using now the ETF for the Russell to give us our exhaustion patterns, and you can see how this broke into a downtrend. So the last downtrend was a really nice one, getting the move going, ending the move, and then we had a little bit of a rally back up, and now we've broken into a downtrend on the Russell. And here's the Dow. So the Dow's absolutely key. 17,000's the level kind of here. Again, it's the bottom of this kind of these exhaustion bars on the way up. We had a series of 4 of those kind of going on the Dow, kind of going on down here, and now we've broken into a downtrend. So the bottom of this kind of range is absolutely key. And then the Nasdaq was kind of the Nasdaq and the Russell have been the weakest. The Russell particularly weak, and then we kind of rolled around, and so now we're down here on the Nasdaq, kind of at 4,500 as being absolute kind of key level and looking weak on a daily chart there. So there we go. A tussle is what we're going to get around this 1970, and you know, a confirmed breakthrough there. With all of a sudden, you know, a lot of people will be saying, okay, we've flipped now into a downtrend because this little localized low has been broken, and that kind of takes kind of traders in, and this will be viewed as a false breakout. If you look at it on the indices themselves, you can see all these exhaustion patterns. So these are blue professional up bars on the Dow, moving into that 17,300 and whatever it was at the highs here, and now we're starting to break the lows of all those blue professional bars. So they were taking profits on the way up there, and now breaking the lows of that would take us into a downtrend. So what's interesting is the way these kind of flip around, in uptrends and in downtrends, these patterns look different. When we're in a downtrend and the professionals are buying up the lows, you can see that we have down bars and blue professional down bars. They buy the lows and then we kind of rally back up. Same one with this professional down bars, and then we break the highs of that. That's showing that they were buying on the way down. This one, professional up bars, and now we're breaking the lows of those blue professional bars. Sorry, was I saying this is professional down bars and we're breaking the highs of these blue professional bars? That shows that the professionals were buying on the way down and we kind of rally back up. This is the other way around. So we're rallying up with blue professional up bars and we break the lows of these blue professional bars. That shows the professionals were selling into that strength and now we're kind of getting ready to go short. You can see the same thing on the NASDAQ. So we had all these Rambo patterns. Amateurs buying the breakout, expecting it to continue to new highs, no, and then we have the professionals stepping in at these highs, particularly on this bar here, and now we're breaking the lows, that kind of sequence. So that was professional activity selling those highs, and the amateurs were getting wrong-footed buying those highs with Rambo. Potential reversal of an amateur breakout. That's what a Rambo pattern kind of stands for. Here's the Russell showing how weak it was here. We had all these blue professional bars, exhaustion buying kind of going on here. We kind of fell off into a downtrend, but when we tested back up, couldn't break through the highs here, and we had Rambo patterns up at the highs. Came back again, couldn't get even close to that high here with the blue professional bar spiking at the top there. Rambo patterns, Rambo amateurs getting wrong-footed, and there's that little sequence of blue professional bars, and we're breaking the lows of those. And here's the S&P 500, Rambo pattern showing the weakness here with a pullback to dirty end of trend, bearish divergence, and all those blue professional bars, and we're breaking through the lows of these blue professional bars, kind of anxious to sell it down. So there we go, we've got all those kind of professional activity things kind of going on. We also had timing wise, we'd had our pullback to end of trends on the 45-minute chart, then it rippled through onto the 135-minute chart. We also had them on the daily chart, so all of this kind of wrapping around. But the sell-off has been quite strong, and the place that I'd look for the next kind of support level kind of on the way down. So 1970 is kind of a key level, but it's once we put in a pullback to end of trend on the 45-minute chart will be key. So this is the exhaustion sell getting the move going, showing the strength of that selling on that Friday. And then we've kind of continued down and we've got pretty big readings here, so that'll go off as an exhaustion pattern on the 45-minute chart on a left shoulder breaking through support. But then we've got to put in pullback to end of trend for price, so we got blue professional bars kind of picking up the lows. We'll need a price confirmation with pullback to end of trend. We'll have an exhaustion pattern that then maybe put in a bullish divergence pattern and rally from there. So we'll be playing around this 1970 level to put in that little kind of localized low, maybe have a weak bounce back, and then if we break through 1970 again, the professionals will come in at some point and kind of sell it down. That's the level where all of a sudden it gets really interesting on the way down, and we could have another couple of weeks of weakness. So the September effect is a 2 to 3 week type pattern. It's not just a couple of days, it is a 2 to 3 week pattern. So that's the kind of the weakness that we might see kind of going on. And it's interesting that we looked when we look at the oscillators versus the yen with carry trade. On the yen we had overbought kind of levels going on here. So this is where we plot the SPY, which is the ETF for the S&P 500, versus FXY, which is the ETF for the yen. So on TradeStation, in order to get these both on the same chart, in order to do kind of comparative indicators, I use the ETFs so I can plot those on the same chart. We calculate a little bit of an oscillator to show the overbought and oversold when they're kind of moving together or moving further apart. The yen, the move in the yen has been really extreme on the way down. Obviously the rally in the S&P has been extreme on the way up, and that's given us an overbought situation. And you can see previous overbought situations where the oscillator kind of punches above this level, and we just plot on a paint bar, white bars up here, just showing kind of overbought. Oversold levels kind of come in here, and you can see over the sequence that we've had over the last several weeks has given us overbought in terms of the market versus the yen. And we're having a little bit of a move back, so the yen will start to strengthen, as I think the euro and the pound will over the next couple of weeks. Just because we've travelled so far so fast, and we need to kind of come back into a more neutral kind of zone. The same indicator, and it's free on the website, I'll link to that, the same indicator you can use for bonds as well. So these SPY versus the TLT, which is the long-term bond ETF. We got overbought as well. It kind of got close to that kind of trigger level up here, but it didn't go above it. So previous overbought levels, we have little white bars, pretty little white bars kind of plotted at the overboughts, but this time around we came close, but we didn't actually kind of break through that trigger level, so it hasn't actually kind of printed there. And again, the sell-off in the bonds versus the rally in the equities, and that's what gives us that kind of little localized overbought. Here's oversold, where the equity markets gets oversold and the bond market gets overbought, and we have red paint bars come up when it's oversold. And then what's the next chart? Yeah, so 13,500 tip bar chart. So this is the sell-off that we've had. So this was the overnight ramp up that they did. Let me just take off better sine wave just to clean this up a little bit for you. So we'll disable that. So this is the ramp up overnight, Thursday night into Friday morning's kind of trade, and this was classic. It was kind of the pros saying we need a good day for Alibaba, we need the market to kind of rally up, we need everybody thinking good thoughts. It's a Friday, which tends to be a little bit of a bullish day. We had a huge amount of excitement over the Alibaba thing over the course of 2 or 3 hours while they're trying to get the thing IPO'd, and that was the the fake out where they pushed it up in the overnight session, which is kind of easier to do because it's thinly traded, and it was a fake out move up to the 2014 level up here, and then during the whole day on Friday it was a sell-off day, but everybody was talking about Alibaba and how much the IPO went off at. But meanwhile, the markets had this really stealth sell-off, and then we opened up on the Sunday night, and then Monday morning we kind of kept on going on the way down. So on the way down now, what we printed. So this is the middle time frame of my high time frame tip bar charts. So the highest being 40,500. What we've got down here is put in pullback to end of trend. We got an exhaustion pattern down here. So the exhaustion sells that we had here were getting the move going, bang, and then all of that volume's come back in, blue professional down bars. There's the 1970 level, bouncing from there, pullback to end of trend. But this exhaustion pattern's happened at the end of trend rather than on the left shoulder. So I'd expect a little bit of cyclicality kind of around here. We're going to be playing around the 1970 level and then have a little bit of a rally back. On the 40,500 tip bar chart, this is also exhaustion sell. So that's the exhaustion sell getting the move going, and that's the exhaustion sell kind of picking it up on the way down, because 1970 is such a logical place to kind of take profits and just rest and see where it kind of bounces back up to. So last chart I'm going to show you is the 1500 tip bar chart. Yesterday, Tuesday, I did not trade because I had some kind of personal stuff to do. But Monday, Friday, and Monday were great kind of trading. Monday was particularly nice. We had a beautiful pattern kind of set off on the way down. I'll just show you that quickly. I will talk about that in another video because I want to talk about kind of good and bad breakout trades and how to trade them. This is a classic. This is the open on Monday. We had all these blue professional bars on this exhaustion pattern come back to this cyclical resistance at 98, and then bang, that was the short trade. Getting short on this break of support here, which should break, I think it was on a triple. We had 500, 1500, 45 all coming together, bang as a break kind of on the way down here, and then it just ran to the end of the day after exhaustion sell, bullish divergence flush patterns kind of finding a bottom kind of down here from whence it's didn't do much after that, but that was a beauty of a trade, and I'll tag that on and talk about that in another video. So there we go. Just to recap, seasonality trade looks like it's going to be a winner this year. So I don't want to count it kind of too early. We've still got a couple of weeks of this to kind of work out, but the 1970 level will be key. So look for a little bit of a tussle over the 1970 level, and then if it gets broken to the downside kind of nice and solidly, looks like we're going to have a little bit of continued weakness.